What's going on, guys? Gabe with ReviewDork. So, you guys want to make some money, you're an aspiring day trader, and you're brand new. Just want some guidance. Well, if you come to the right channel, make sure you guys like, share, subscribe. Also, make sure you check out the playlist. Currently, we have 12 videos that are very helpful that will help you grow as a day trader. And I'll include that link down in the description. But let's go ahead and get into the video. We have the Stochastic Oscillator. Now, a lot of you are familiar with the RSI indicator. However, this does things a little different. Now, let's go ahead and get a definition on what the stochastic oscillator tells you. The stochastic oscillator is range bound, meaning it is always between 0 and 100. This makes it a useful indicator for overbought and oversold conditions. Traditionally, readings over 80 are considered overbought and readings under 20 are considered oversold. However, these are not always indicative of impending reversal. Very strong trends can maintain overbought or oversold conditions for an extended period. Instead, traders should look to changes in the stochastic oscillator for clues about future trend shifts. All right, so let's go ahead and get into the chart. Now, we have the 200 EMA. If you guys are using Webull, it's very simple. You go on over to indicators, you go to edit indicators, and then 200 EMA, you would then change the default length. This would read 120. You want to change it to 200. From there, you want to go on over to stochastic and MACD, as you can see here, and we want to enable those as well. Once you have all that set up, your chart should look something like this, and this is how I enter and exit a trade. Guys, we're going to keep it super simple because we do not need wizardry when we are trading. Trading is all about making those fast decisions, being able to look at your indicators and executing. It is that simple. You get better and you get faster with more practice. Welcome to Wall Street, guys. This isn't fucking Sesame Street. Now, we have BBIG here, which happens to be a very popular equity. What I would first do is confirm that it is trading above the 200 EMA. Secondly, I would go ahead and draw a trend line. I want to see that the equity is following a trend. Now, as we have this trend line plotted, we could see that it looks like the equity respects the trend line. It is still showing strength hanging above the 200 EMA. So now let's look at the stochastic because it's going to help us enter and exit. Now, why do I use it with the MACD? Guys, if you do not know what the MACD is or how to trade using the MACD, watching the videos in this playlist will help you immensely. What I like to do is look at these two lines here. We have the K line, which is blue, and we have the D line, which is orange. When the K line breaks above the D line, that is telling you, hey, it's time to buy, or that time is coming. All right, so we have the crossover, we break above 20, and we are waiting for the MACD to give us that confirmation as well. The MACD line crossed over the signal line. It is now time to play. You would go ahead, enter your position, but set your stop loss just below the swing low. And the swing low here is 766. You then ride this baby to the moon because you can then make a sexy profit of over $1 simply by following both the MACD, the histogram, and the stochastic. Now, the stochastic is remaining elevated because the equity is following a trend. We have a dip below overbought. However, we still have confirmation with the MACD where the MACD line is trending above the blue line. So it's not time to sell. But what happens here? We can then make sense where we see that the MACD line is beginning to converge on the signal line, but the stochastic gave us the signal to watch beforehand. What happens? We could exit our trade or we can hold, and then we have confirmation here with the MACD. We can see we have a bounce, but I want you guys to pay close attention to what's happening here. As long as the stochastic stays within range, meaning it does not touch the 20, that also confirms a trend. So in this situation, we see a shift in momentum, but the stochastic did not hit 20. It stayed within a range. So that gives us the confidence to hold even longer. We then break through this cycle and we have continuation where we are showing strength on the upper end of the stochastic. You could enter this trade way down at 7 and have exited way up at $9. There is no perfect entry or perfect exit in any equity. I have a rule: take profits always. If you're in doubt, that is the time to take profits and secure the bag. You got people who go ahead and say, I was up $2,000, but I got greedy and then I lost it all. This is Wall Street, not fucking Sesame Street. I want you guys to go ahead and back test this and play with this. But as you could see, we have a great example where we reached a high and then we had the signal from the stochastic where the K line crossed below the orange line. We also have confirmation with the MACD and we can see that the price then entered a downtrend. But as you could see, we bounced off the trend line. The stochastic confirmed it. We then entered an overbought condition. We bounced back down and we are now currently in an overbought condition. No trading indicators perfect, no trading methods perfect, but at least you're able to enter and exit trades without having to listen to your friends. Because your friends are going to say, hey, jump in BBIG, you're going to make money. And you know what? You jump in and you lose money and then you block his ass. Anyways, guys, I hope you've learned something. This is Gabe. I'm signing out. Peace.